to levels that best performance, I believe, ever in a 4-day period. Stock's up 900%. So get in the fake meat van, everybody. We're going to go try to tackle this market and make some money trading literally the worst stock in the history of the U.S. equity markets. Before we get there, we're going to be joined by the Pope, which is going to be awesome. The runner will be coming at 9 o'clock, and we'll be going to be, again, beyond meat, beyond sanity, talking about the things going on in this market. Good morning, Lyndon, John, Say, Rodney, Micklick, Secret Agent Charlie, good to see you. Good morning, Eric, Doug Beaver, and Judd. All right. So before we are blessed this morning, 9:30, remember, that is your exit liquidity. We had some big earnings numbers come out yesterday that certainly are going to be in play today. Texas Instruments, we'll discuss that in a little bit. On top of that, Netflix having a pretty dismal morning as we dig into it, and Netflix down on the backside of weakness on Brazil. Big move down, 1145, pushing under where they were during that recent sell-off, actually the last two sell-offs that created weak momentum in the broader market. 5%, well, really 7.5% after missing expectations. We'll dig into that in a little bit, but do not be shocked. And part of the strategy and the things that we will discuss today are looking for reversals, some reversions, some opportunity to scalp in this environment, which is great. So again, there's opportunity on names like Netflix, but again, we'll talk more about stocks that have deep upside, stocks that have breakdown, exact lines you should be looking at. We'll discuss top screens and, of course, top stories and tickers as they arrive. Really quick, 8:47, we're going to talk briefly about momentum. And this is a pretty interesting market because the CNN index has this rated as fear. And we are seeing more stocks over this period of time getting this move up 5% on the week, up on the month, higher beta names. The market is likely going to start crowding more and more into that high part of the Mag 7 S&P 500. We're seeing names like, forgive me, we're seeing names like Amazon. We're seeing names like Meta. We're seeing names like MasterCard and American Express. Those higher echelon market cap names starting to push toward key moving averages, starting to push higher, breaking out. And the reason that that matters is because if you look across the bow of the market and you analyze what's happening here, 52% of stocks are under their 50-day moving average. This is obviously concerning when you hit that 60, 70, perhaps even 80% level, but it just showcases the breadth and the concerns that I have about crowding into these big technology names. That is going to be the continued trend to focus on heading into the update on CPI. We still have a large number of earnings reports that need to be sifted through in the coming days. And as we assess and analyze just kind of what's happening with momentum itself, the real weakness and the real challenge remains the elevated selling pressure in the Russell 2000. Now, it doesn't really look like it, obviously, at 246, and we continue to hum along that 8-day EMA, but we have had elevated selling levels, meaning rotation, for the past 3 weeks. And this is not something that is typically common. Typically, we see less volatility on that side. On the S&P 500, however, the number of stocks that are in breakdown mode has really collapsed, and it's going to take some sort of big event, risk-off event, that would effectively push us down further. Stocks like Ford continuing to climb into their earnings report tomorrow. We're seeing strength in companies like CCL and RCL. And why does that matter? Well, it matters because, as always, momentum lives in that environment. All right, so do we have our guest? Let's find out, because if not, we can always change it.
We do. I forgot to add him.
Oh, well, thanks.
Yeah.
All right. Let's drum roll, please. There he is. Good morning, Gianni. How are you today?
I'm good. How are you?
I'm great. So I wanted to bring you in for a little bit of a conversation this morning. You know, kind of a odd little environment that we continue to sit in, no data to really operate on, lots of earnings reports, and obviously the attention being drifted toward these short squeeze stocks. From a momentum perspective, what are you specifically looking at right now?
Well, it's pretty incredible if you ask me, because there's been a bit of a shift in momentum land. A lot of the quantum names, nuclear names were the high flyers over the last month or two, really. And we did very well in those. But now that seems to have shifted over to Beyond Meat. And what's kind of crazy is that and Beyond Meat is, we could have a whole conversation on beyond whatever it actually is. But the point I want to make is that the charts that we were looking at in those quantum names and those nuclear names actually looked pretty good. Beyond was just a pure short squeeze. I mean, I know there's a bunch of stuff going on with the bondholders, all that. So, I that's not really my style of play when it comes to momentum. But when you hear the word momentum, I like to think of bubble too. Look where the bubble is. I mean, everyone's saying stocks and AI in a bubble. Well, I mean, did you see what happened in gold this year and in
Mm-hmm.
silver? I mean, the rises that we've seen in precious metals were substantially larger than what we've seen in stocks in the same period of time. But no one's been calling gold and silver a bubble. Why?
Well, I think that when you get into specific type of metrics and you see the type of moves that have happened, it's very easy to do things in hindsight. Like that last
Sure.
move from 4,000 to 4,500,
Yeah,
that's speculation. That was very clearly
absolutely.
speculation, and obviously a lot of emphasis on holidays internationally. And it's funny to actually you bring up a chart that I think is really speaks to the just how quickly markets do move, and that is the GDXU. The GDXU is
Yeah.
the leveraged ETN around gold miners. This was at 270 a
Wow.
week ago. It's at 145.
Yeah.
And again, these are things that if you are a momentum, like a longer term leverage momentum trader, these things can and will run. Like it was a phenomenal trend, but this broke down so quickly. All of this has been erased. And the GDX, which is the miners, which top performer of the year,
Mhm.
85 down to 70. And now you're really going to be at this key line here in the sand. It's the 50-day EMA.
Mhm.
Where does money rotate out of mine? Anything that you've seen that has been speculative, right? Whether it's been the short-term early formations of AI, early tech, and now even in this situation of very heavy crowding into gold positioning. Where does money in your mind typically rotate into after these types of events unwind?
Well, the optimist in me is looking for a rotation into crypto into year end, believe it or not. I'm watching Bitcoin and Ethereum pretty closely here. More so Ethereum, when you look at its chart, it's been going down for 2 months. I mean, Ethereum topped out in late August, hasn't been doing much since then. Bitcoin's had a sharp 2 week correction, but I also have my eyes on the dollar. The dollar's starting to come back, and it's been
Mhm.
one of those plays over the last several months. It's been really choppy, really messy in Forex land. And I've been, reminding people that, hey, we have all these headlines about trade talks and tariffs. Well, that's actually being duked out in the currency market. That's where it's really happening. It's not, in these fancy boardrooms where these, politicians who think they're more important than they really are determining our fate. No, it's actually in the currency market. So, you might be thinking, well, how do I reconcile a strong dollar with strong crypto? Well, that usually happens like in the later stages of the crypto cycle. And so I'm not ruling that out. I mean, we're down today in cryptocurrencies, so I'm looking to see if we can rebound. If we do, I think we can see some momentum going into year end. But then, of course, stocks. I mean, stocks have done well. I don't think the AI story is over. But I do think precious metals, we've seen the high of the year. I don't think we're gonna, hit a new all-time high in 2025 at this point. But I do think we're setting up for a nice dip buying opportunity going into 2026 for precious metals.
Sure.
It's not going to be a straight shot back to new all-time highs, but if you didn't participate, like, you need to be paying attention now, because I don't think the underlying currents have really changed for gold and silver.
I've been in very long gold since March of 2024, when it
Yeah.
was at 2100. And it was kind of this realization that, oh, there's nothing that they can do to try to contain our deficit. So the expectation was I didn't anticipate it was going to double. I really didn't. I'll speak point to that. My
Me either.
target was 3,500.
Yeah.
Right. But now the question is, people are saying, well, are you going to sell? And the reality is like, no, because if I do, one, I still maintain the same long-term view. I might have to reallocate a little bit and move my stakes around a little bit, but I still feel pretty well positioned. But then I have the tax element, and that's the other thing. So secondly, I buy a lot of physical, and I own physical trusts. So like I have stuff in safe deposit box, things like that. If I want to sell it, I got to pay taxes. I got to pay fees. I mean, like at the end of it, I will end up probably back at like 3,200, maybe even less than that, right? If you like net it out, and that becomes that's an opportunity cost. And again, if I'm going to stick to my thesis, I still think we will hit 5,000 by the end of next year. But definitely, pull back 3,800. I'm probably going to dip back in a little bit, and then if we hit 35, then I'm backing up the truck.
It's funny when you bring up the physical ownership of precious metals. I've in recent years I've been doing more investments, I suppose, into mining shares, and they've done better than the spot price of physical bullion. But a lot of my bullion purchases were probably 10, 12 years ago. And,
Right.
That was kind of when I was a recovering gold bug. So I thought, dollar was going to collapse, gold's going to go to 10,000 overnight type thing. And so, I bought a bunch of physical, gold and silver, and, it's stored away properly. But it's amazing because like I haven't touched it, right? But it's all
Right.
this like that I've just let sit there, and I'm just like, wow, like it actually did make me money. And same thing with you. Like I'm not, my basis is a little bit different because I got mine from like pawn shops, right? But then I
Yeah.
put them, I sent them over into storage units type thing. But yeah, I mean, it's one of those things like the trend really did take, and
Yeah.
it doesn't look like it's over yet. It was just overbought, speculative, like you said, that last rally from 4,000 to 4,400. You saw videos of lines, people around the world lining up at jewelry stores or bullion dealers to try and get in on the train, and that was the top signal.
When you look at, we have a Beyond Meat situation, again, another
Yeah.
146%, but a lot of other stocks are squeezing, stocks like Children's Place. I think you and I both, when assessing momentum potential, you look at where the stock was a year ago, looking back in, certain time frames. For example, 11/24, this was a stock up at $16.
Yeah.
There's no real fundamental drive here. But when you're looking at a stock that has actual fundamentals, a company like Uber, for example, I remember you went back and you had liked Uber over a longer time frame. I think you were saying, this was going to get back up to 94. Here we are at 94. When something is peeling back the way that it was and is trying to make a rebound over time, what specifically are you looking at for a longer term momentum shift?
Well, I'm a chart guy. I need to
Yeah.
see the trend turning up. Uber's still in an uptrend. We haven't really
Yep.
made a significant lower low. That stock that you had up, PLCE Children's Place, that looks like a stock that's trying to come out of a bear trend. That's the difference. So, I am a trend trader. I think that you get the bigger moves in the direction of the underlying trend, meaning that if a stock is in an uptrend, you're going to see bigger swings to the upside. Versus a stock being a downtrend, you're going to see, bigger swings to the downside. Now, the exception, of course, is short squeezes. And with the nature of short squeezes, you have to see where the rally takes you relative to the previous highs. Because if you start taking out those previous highs, then it becomes a conversation of, hey, is the trend changing from bearish to bullish? And if so, the short sellers are really going to get pinched, and that really creates a lot of fuel for the stock to bottle rocket higher. So, yeah, I mean, Uber, I really don't know if they're winning like the autonomous driving war, Garrett. Not to change topics too
Sure.
quickly, but I know that you are a big Tesla follower like I am. Tesla's earnings today, and I
Yep.
like that stock quite a bit. I don't speculate on the outcome of earnings necessarily, but this chart does look really strong, and I think that it's one of the last names in the Mag 7 that has not hit a new all-time high this year. I mean, Apple was one of them. Apple finally hit a new all-time high. And then you even look at Amazon. Amazon hit a high like back in January, I believe, or February, new all-time high, but it's been quiet ever since. But all the other Mag 7 names have rotated, and I'm looking for a rotation into Tesla now. It looks primed for a rally higher. So, just to tie that into Uber, I think Tesla's kind of positioning themselves as the winner in the autonomous, driving space, robotics. I don't even think it's really a car story anymore.
Right.
I think the market's looking behind that.
Well, they're trying to, right? They're constantly, it's a battle between narratives and fundamentals, and
Yeah.
narratives with Tesla seem to have always be the primary winners. All right. Well, Gianni, I want to thank you for taking the time with us this morning. We are going to throw a CTA in for Trinity. Tell us just a little bit about the Trinity service.
Oh, the Trinity. Well, we've been having a lot of fun over the last few months. So if you've not been participating in these epic moves that we've been seeing in this market, I need you to check this out because basically what we're doing is looking for the stocks that show the most strength in the market. And there's a way to screen for it. There's a way to position yourself for it with minimal risk. And so that's what we've been doing, capitalizing on these trends in quantum and in tech and in AI, and even precious metals. We've been all over these trades. So, I did some very deep screening and scanning over the last week or so, and there are so many setups still in this market. And it's very exciting going into year end, especially as we go into seasonally one of the most bullish times of the year.
Awesome. Well, Gianni, thanks for your time today. We're going to head over to the runner now. I hope you have a great day.
Thanks, Garrett. Talk to you soon.
All right, everybody. So check out the link on Trinity in the chat, please. And we're going to get back to, well, this is Charlie's time to shine, right? Charlie's time to shine. Thank you again, Gianni. All right. The runner. We'll skip all the big macro stuff. We'll talk about that in a moment, okay? Very good. CCO. All right, what are you doing? You're back. This thing. It just keeps coming back. It is legitimately like perfect for Halloween. Back from the dead constantly. Pure momentum stock, and a pretty good representation of consumer cyclical names with no data, in fact, right? But CCL continuing to climb higher, continuing to move. And in this environment, what's nice about CCL, pretty good options chain, pretty good way to trade this and keep it cheap. So looking at CCL as, by the way, RCL at equally in strong momentum environment, this does not need to do much to pay. So at a stock trading at $30, going out a week, going out to the 7th of November, right now, the $28 call, which effectively now your stop's going to be somewhere in this range in the low 29s. You buy that 29 for about $1.50 for October 31st, and just right back to these near-term highs, 32. 31.50 will do. The 29, 31.50 is 115 to make 135, 46% probability of profit. Now you need the stock to hold, and I would not enter this position until we were about 15 minutes into market open. But you're looking for a continuation of momentum today. This and CCL companies announcing first ever 28-day Caribbean cruise retracing the historic Pan Am Clipper routes. No clue what that means. Don't care. Just care what the stock is doing, pushing above key moving averages, looking for continued strength. If it pulls back, right, to that $29 level, you're out. But that's about a 40% decline in your position. So keeping a tight stop right around that 29.50 level would be about a 23% decline. And if this can get back up into, say, 31, you're looking at about a 60% return. So in the chat, let's type it in there. Very exciting. Very exciting. Very exciting. It's all exciting. Cool. All right. On top of that, it's there. And it was on the name. It was one of the names I was talking about yesterday. This has got to get above 735. Okay. Meta needs to get above 735. If it breaks above 735, I'm in. So keep an eye on this. It's hovering above these adjusted moving averages across the board. But Netflix could weigh on it. That's important to note. I think that Tesla's earnings are going to be far more important for Meta than Netflix was. But Amazon is under pressure this morning, I think because of Netflix. So again, Meta 135 is where I want to see this break because again, on our 30-minute chart, it has not been able to get above that key level. We get above that key level, you've got a little bit of space. All right. And then Zoom. Shockingly, an inexpensive stock that does not want to die and wants to get back to greatness. Ugh. Remember that? Ugh. Remember that? We're all going to work from home. Ugh. Yikes. Well, we still do. We still use Zoom. And it took time. There's a market cap of $25 billion with an enterprise value of 17.2. This company has an unbelievable balance sheet. It's fantastic. So what can they do? I think they get bought out at some point. But the momentum is here. The crossover's there. I like selling spreads on Zoom. I like Zoom. I have turned the corner on this. It's my old Beyond Meat. It's the old Beyond Meat. Zoom. Put spread. Credit spread. I like this stock. I don't know what it is. I think it's just the fact that it's got a good balance sheet. So Zoom, November. All right. Get down to that. You get me down to that 75 level, maybe. Might have to go out longer. I might have to go out to December on this. I'll tell you, like 75. Yeah. I'm going to find something on this. This is one of those longer term names that I'm okay owning, like even all the way out into January. Buying the 70 and selling the 70 and buying the 67.50. I got to find something here. We'll report back on this. Zoom in play. What's on the downside? I got 9 minutes before I have to figure something out. Coin. Well, crypto's obviously under pressure. You want to take a shot on Coinbase? You think that there's something really wrong in the broader markets? Coinbase is a straight put. It is a straight put. It is a straight put opportunity here. It ain't cheap to do that, though, right? Particularly if you are trying to take direct aim at a name that potentially go down another 10 to 15 points. So lottery ticket play, even a lottery ticket play is expensive. Like Friday's 322 is still 250. And your probability of profit's going to be under 20%. So if you stay in the money trying to tackle this at around the 330 level, it's going to cost you $5. You need to be focusing on volume weighted average price, and you need to be focusing on short moves. If this thing squeezes today and we get up into this upper range, keep an eye on the 8 and the 20. And if it turns over, start to target something that's a little bit out of the money and look for a short move, $2, $3, using something like the $30 put could be very, very valuable. You need to really tighten up your time frames right now. It's very difficult right now to try to time these moves on a daily chart. It really is going to come down to positioning and volume weighted average price if it is elevated. But I do like fading coin. Netflix is under pressure. Same thing happened last time. Beaten up. Stock is just, watch it rally today. Netflix, you need to be focusing today on volume weighted average price. And we're going to talk about volume weighted average price in a moment and how it pertains to Beyond Meat. But you're looking today for moves once we get down into these standard deviation lines. If selling persists and this widens out and you have, you got $2,000 in yesterday, the way that this thing moved post-market. If this widens out, there's going to be opportunity for reversion. And remember, Netflix does have 2x ETFs. That is the NFXL. So if it does get some support, a daily way to trade this, and there will be a lot of volume on this today, expect much higher regular volume. The NFXL, looking to trade that around volume weighted average price. Instead of paying $1,700 to trade one share, you could trade leverage shares using VWAP. We'll talk a little bit more about that in the afternoon today, particularly as it pertains to Tesla reporting tomorrow. Other stocks to watch: STNG, HOV, and MGA. Okay, so just on the list real quick, an eight crossover. Momentum is improving on the STNG, which again, a lot of these stocks are looking better, the tanker names. We like this, just this crossover that's transpiring here. Stop back at 55, buying the stock, looking for a continuation of trend on these tanker stocks right now. HOV, Hovinian Enterprises, I like that. We need to get above that 130, 150 level. So wait for the trigger above this level. Stop is one, average true range lower, so it's about 566 from here down in here. But again, another consumer cyclical stock finding momentum. MGA we've talked about as well. Same thing, looking for strength, keep a tight stop. Stop below that 8-day around 45.25, near that 50-day moving average, waiting for further confirmation on this 8.25 move and looking hopefully for another move back to $49. All right, so you got your runner. You're all set. You know what to do now. Zoom has ended chat rooms. Well, I'll be the judge of that. Couple of things for you at the top. Got 8 minutes. I like this format a lot better. Have a nice conversation first and then dig into the meat. Netflix and Texas Instruments today, right? Texas Instruments got whacked. Very bad, right? So there's going to be a lot of chatter around whether or not this is significant for NVIDIA. It's a little more isolated when it comes to NVIDIA because at the end of the day, Texas Instruments, their exposure is a little different, right? So what I want to just point out about TXN and this kind of soft guidance, revenue was fine, beat expectations on what's 4.74 billion. But their very heavy exposure is in analog and embedded processing. So that's industrial, automotive, and Internet of Things. That's less so the high beta stuff of AI data centers and compute chips like what NVIDIA does. So again, it's limited exposure to AI server technologies. The good about the Texas Instruments is that the semiconductor universe is very highly fragmented. Some segments are booming. Others, the analog, the industrial, are more challenged. And that's a reflection of the economy. The caution, though, is that if it degrades materially, it can impose a drag on the broader sector itself. While the upside in the concentrated areas is strong, this does not derail the high growth element whatsoever. But it is a reminder of how strong narrative tailwinds are. And just one of these types of events can ultimately lead to just somebody who isn't in the know panicking and leading to a cascading and drawing further headlines of, hey, AI is in a bubble, AI is in a bubble, while other things are selling off, people panicking about gold. Remember, people were leveraged in gold. They were leveraged in a lot of those positions. They're unwinding those positions right now. And if there's margin calls on any of these metals, what are they going to have to sell? They might have to sell either U.S. bonds or the Mag 7 stocks. It really comes down to leverage at the end of the day. So if there is weakness in the semis, look for a rotation into defensives. Gold dipped under 4,100 after 9 straight weeks of gains. Traders taking profits. I think there's a lot of leverage unwinding, but the dollar is also the story here. The dollar has done very, very well over the last couple of days since we had that bottom. We showed that chart of the UUP. That's the dollar bullish index. You can see it has bounced back relatively nicely in the last couple of weeks, since that low that we had in 630. Continued momentum here. It doesn't really mean that dollar is going to get back to an all-time high, But these types of moves, and I've talked about this before, when trading the dollar around key moving averages, the nice thing about trading the dollar is it can act as a hedge, and you don't need to use the full bullish fund to be successful. You simply have to go out 30 days and buy whatever is in the money, and you're going to pay virtually nothing for the associated time. That's the nice thing about dollar futures in these ETFs. Relatively simple to trade and very, very cheap to do so in the process. Again, concerns around risk on sentiment returning. Pullbacks is the conviction on the bulls. Are people going to buy at the 50-day moving average for the GDX? We will see. The government shutdown remains, again, back in focus. The FOMC blackout adds more opacity to the October meeting next week. Pay attention to the dollar, the SPY, the VIX, and the TLT. The U.S. government shutdown, right. You know that, again, it's not going to be so much about the shutdown. It'll really be about what is done while the shutdown is transpiring. Last 4 minutes. All right, let's get this over with. A couple of years ago, somebody put me in a van, and the bit was born. Beyond Meat jumped 80% after announcing expanding distribution with Walmart. Time for me to short Walmart. This is a short squeeze. It is added to the meme ETF because why not? And this stock has moved in a parabolic fashion that I can only go back and compare to the start of what happened with, well, GameStop. Nobody is buying this company because of its underlying fundamentals. I assure you of that. $500 million company with an enterprise value saddled in debt at $1.1 billion. It loses $135 million a year, and its book per share is negative $8. This is a pure short squeeze with extraordinary short float, 63%. And if that squeeze continues, that has to be unwound. There's only 14 million shares that are technically long. They have to be bought back. They have to be handed back to their ownership. And then the owner has to decide what to do with them. Well, the ETFs are going to do pretty well. And the meme ETF, the Roundhill meme stock ETF, does not care whatsoever what is happening with this stock. The whole purpose of it is to collect fees and hope that people will trade it because they're just going to collect an adjustment by doing so. All right. So what do you do? Well, I'm going to go back to a good friend's trading strategy on this one. Volume weighted average price. The volume on Beyond Meat is going to be monstrous today. It was monstrous yesterday. It will be huge again. This is going to be a day trader's delight. But the problem is that people don't know when to get in and get out. People will chase up in these upper parts of price, and there will be pullbacks, and people will lose money chasing it up here at $9, and then 10 minutes later, 20 minutes later, an hour later, it's down at $6. When we launch, volume weighted average price is, again, a very simple thing to set up. Over a think or swim. What do we do? Well, the very simple thing to do is to bring up Beyond Meat on your chart. There we go. Beyond Meat becomes your chart of the day. Look at that, 5 cents to $8.50. And I'm telling you right now, the frenzy is not over. People will keep doing this until there is no more juice left to squeeze, and there is plenty of juice in this disgusting plant-based meat. To set up volume weighted average price, you pull up your chart, you move to 1 minute, and you bring your scientific lab open right here, because that's where this stuff was made. You type in VWAP, and you click it 3 times. In each one of them, you will set your settings. The first will be -3 in your number deviation. Your second will be 3. The second one that you will do, and make sure that your colors are different. Let's have different colors. That's important. You need to know what deviation line you're using. The second will not change. The third will change to -1 and 1. And we will change this one to a nice orange. Great. And we'll apply all of that. Now you have these deviation bands. Standard deviation is going to be this middle line. That is your volume weighted average price. That is the magnet of the market. If and when the stock pulls above volume weighted average price, I'm going to tell you right now, do not chase it. If you want to trade Beyond Meat and all the volume and all the insanity that is coming, don't worry about upper bands on deviations. Focus on when it crosses volume weighted average price. If it crosses above volume weighted average price, that is your buying point. Your stop point is right back at volume weighted average price. If the VWAP is ascending during the day, you cannot lose money, because if it is moving up as you bought into it, and in this case, here you are at 213 yesterday, if it had come back, you would have probably hit somewhere around 270. Right? If this would have sold off, it would have collapsed down to 275. That's 60 cents on 212. If you are a braver and this thing really sells off, you are looking for a move into the 4th standard deviation of price, which is down here under the 3rd band. You do not need to use options on any of this. You should not be buying options on any of this. You should definitely not be selling credit on any of this. Do not get into the habit now of trying to sell spreads and iron condors. Do not try to be going out and saying, I can make a couple of pennies based on these figures that are up here at the $10 to $15 level on Beyond Meat. I'm telling you, if you do that, that stock could be at 30. There were people who tried to get out in front of that steamroller during the GameStop phase. They got crushed. I remember listening to 2 very prominent people saying, I can't afford to keep making this trade, even though the high probability was in the 90 percentile. So today, volume returns. We start to sweep back up. We crack. Again, you sell off. We crack above VWAP. That's your buying point. You hold until you get out of that line. That's it. Pay attention to that. Nothing else. Credit to Kenny, as always, for that trade. It has always been a very good trade for high volume madness. And this is high volume madness that will continue into the weeks ahead. All right, 9:23. That means I got to go. I'm late. It's 23 after 9. That doesn't rhyme. I hope everybody has a great trading day. I will be back later today in the afternoon. We will go from there, and I am done. Have a great day, everybody.